It's finally October and it's the best time of the year for everyone from investors to Halloween enthusiasts. It's the month of scary movies and potentially exponential gains in the stock market. Within the stock market, October is the start of the fourth quarter. It's when businesses, specifically in retail, see the biggest increases in their financials. Key reasons for this are consumer spending holidays and celebrations such as Halloween, Thanksgiving, Hanukkah, Kwanzaa, Christmas, and the holiday season. In the fourth quarter, customers come to the store not to just browse, but actually spend their money on goods. This is why in today's video, we're going to be focusing on 3 different stocks that I believe will be at least worth it to keep an eye on for the month of October. Before we go look at the first stock, I want you to punch that subscribe button down below and drop a like. Remember, I've also added links for you to get over $360 worth of free money using sign-up bonuses. But with that information, let's get straight into the video. The first stock that we are looking at is Apple Incorporated. This is an American growth stock that pays out a quality dividend, and by considering the company's cash flow potential, investors are likely to benefit through sustained dividend growth and aggressive share repurchases. It's also worth noting that year-to-date, Apple stock has recently trended higher by just 6.6%. It was recently reported that the iPhone 13 has seen 5 million pre-orders in China. With strong global sales for the new iPhone, this is a great stock upside catalyst. Additionally, the new product launch also includes the iPad mini and the 9th generation iPad. Apple also seems increasingly diversified. For quarter 3 2021, the company reported healthy sales growth from their services, wearable, and home accessory segment. The iPhone remains the cash flow driver with yearly updates to their products and product line. Within the holiday season coming up, we can see their sales exponentially going up and see the true value of the company in the eyes of consumers and investors like myself. However, in the next 5 years, this company is likely to have more than one cash flow. As I mentioned in one of our shorts earlier this week, Apple is potentially trying to enter into the electric vehicle industry, and this is a possible game changer for competitors such as Tesla and many more car companies. Overall, Apple stock is worth holding for investors and for the upcoming quarter as well. Innovation will continue to drive this growth and value creation within this company. The second stock that we will be looking at is Manulife Financial. This is a Canadian dividend stock that has seen one of the biggest hits from the pandemic. This is because of the low interest rates that have been instilled from the government as a tactic against the financial pressure of the pandemic. These long interest rates have remained near historic lows, which is the worst case for companies such as Manulife. Apart from the impact of the pandemic, Manulife is still one of the best insurers that investors are keeping an eye on right now. Their businesses is diversified all across the world, with operations occurring in the United States, Canada, and other parts of Asia. They currently have impressive growth potential, even though they've been stagnant in the last quarter. They're currently seeing some great growth in their Asian countries such as China, which is always a great sign for companies as they understand their ability to expand their business, and it helps businesses and other investors understand the impact of their business model to their customers. And one of the biggest reasons why I picked this stock is because of the current volatility in the market. Currently, the market is experiencing various days of volatility within weeks and months of bearish signs and red graphs. Investors are currently fearful of interest rates and their likelihood of eventually having to rise and to showcase their forces of inflation against the economy. With this likelihood in mind, Manulife is more enticing for me as a stock as it showcases their potential to go back to pre-pandemic levels. Overall, Manulife is a nice stock to hold for their growing dividend every year. But paired with the fears of inflation, this stock is so tempting to just ignore. The third stock that we will be looking at is Visa. This dividend stock is a payment processor that has been growing exponentially within the last 10 years. It's been appreciating so much in the market that its current dividend yield is around a measly 1%. However, the stock still has room to grow in their dividend increases and their growth potential. The reason for Visa's success is because of the economic cycles that have been occurring throughout time. More often than not, economic expansions last over a few years, while economic recessions last for a couple of months, apart from the major stock market crashes. This cycle has allowed Visa to grow more often than they fall over the length of their business. Visa is only known as one of the most dominant forces in the US as it leads the global market for consumption. As of 2018, Visa handled 53% of all credit card network purchase volume in the US, which was more than 30 percentage points higher than their next closest competitors. Furthermore, Visa's share of the US payment processing market expanded faster than its peers in the wake of the Great Recession. Their ability to take great risks and go for opportunities is another reason why Visa does so well. They have an uncanny ability to organically expand into regions that haven't been touched by their products. This has allowed them to fearlessly pull triggers on expansions such as the Visa Europe buyout in 2016. With the holiday season coming up as well, Visa is destined to see more transactions and usages of their products. With great financials and great growth potential, I see Visa not only having a great October and fourth quarter, but also seeing them having a great future all around. After looking at the 3 stocks that I have focused on, it's important to do your own research and due diligence if you're considering to purchase these stocks that I've mentioned and adding them to your portfolio. Some honorable mentions for this video include PayPal, Enbridge, Alimentation Couche-Tard, and Aritzia. But with that being said, remember to punch that subscribe button down below and drop a like. Feel free to drop a comment if you agree with my picks, and if not, let me know what you think would be better. That being said, join me next time while I'll talk about the 6th stock to add in my small account growth challenge. Bye for now.